What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we're taking a look over here at the XRP price chart, as the price of XRP has worked its way all the way back up into the Fibonacci retracement levels of the range that we've been in here for the last few months. Even throughout the weekend, poking right there through that 702 Fibonacci retracement level, as we now get our way back to the final Fib retracement level there at 0.786. I posted over there on Twitter last night, as this week nears its end, XRP has reached the very last Fib level. These levels are where the ultimate danger resides for a turn back down to the downside, break through the final Fibs, and things can get exciting pretty quickly. I had some people ask, well, what are your thoughts that we've gotten through the 702? While we do observe that the 702 reaction level is an incredibly common rejection level that we've seen for Bitcoin many times, as we did back in 2021 with Elon and Saturday Night Live, it also did over here for Bitcoin back in 2020 before crumbling down to lower prices in its ABC correction. And of course, the most famous one for Bitcoin as it hit its top and retraced back in 2018. The case was also the same for Ethereum back in 2018, getting back to that retracement level as a rejection, and even for XRP in various times back in 2018, right back to retracement to rejection at 702. And even for Ethereum over here back in 2019 and 2020, as we worked on our ABC correction, we just so happened to shoot our way back to the 702 for Ethereum, to then have the C19 crash just mysteriously show up later. For those who've been following the idea of Bitcoin that we've been discussing since April 5th, the boxes were not drawn out of guru magic. They were created using Fibonacci retracement levels, in which Bitcoin, even in here, got itself back to the 702. But even in here, we could see wicked slightly above it multiple times, but did not exceed that 786. And while common, we know it's all the Fib retracement levels that can act as resistance levels. For XRP, back here in 2021, it was our 618 Fibonacci retracement level. In 2020, before the C19 crash, which like we saw with Ethereum went to 702, you could see that XRP went to 50% or 0.5. And over here back in 2020, after we went through the 22.5-cent time period where we hovered in the lower 20 cents for about 2.5 months, XRP eventually worked its way back up into retracement levels, collided in with that 786, even slightly wicking above it right here to eventually pull back down below, finally work its way through and then get its blast out using the 786 as a resistance break. Whereas in 2017, XRP had to use the 618 as retracement levels to eventually go on the big break, clearing the final three of 618, 702, and 786. But what is interesting about this time period from back here in 2020 is a similar behavior to what we're experiencing right now. And we've been talking about this particular moment in time here for a little while on the channel now, that this time has been very similar in appearance from what we had going on back then at that time in 2020, where we have our C19 crash, and back here in 2022, we have our FTX crash, holding the lows, breakouts, backtests on the 200-day moving average. Then now here we sit back at the final retracement levels, similarly to what we once did. But just because we're here doesn't mean I can let my guard down. As we saw in each breakout for XRP, it happens with conviction. It happens with violence, and not with this type of crawling price action that has happened in here. So while we can find ones that are common, we can absolutely find different levels that can react in the same way. And while we have seen XRP hit the 786, pull back down, then eventually break out, in the end, it doesn't change that this is a big resistance level in here. And so today we're going to be talking about this still residing here, the cautions I still have currently on it right now when it comes to Elliot waves and just being at the Fib levels. And all those worries would get massively tamed on the hit of 55 cents or higher, which is what we talked about last week. But when it comes to Fibonacci retracements, we're definitely just at a retracement level. We've grinded our way back to the retracement level. We have not experienced moonshot style price action happening in here. It's really been just a lot of grinding. We have not experienced what the breakout is as also shown back here in 2017. We've seen a lot of grinding action back to retracement levels, but we have not seen breakout price behavior for XRP. Even in XRP's momentum after the SEC lawsuit, the upward moves moved with high velocity, right? When these breakouts would happen, you'd see these resistance levels, 702, above 702, but below 786. Then finally it has to come back and revisit it a second time. And then breakout volume, breakout momentum, and excessive price action, which this is not exhibiting, at least as of yet. So while, of course, there is excitement to see upward price action happening in XRP, I'm totally a fan of seeing a 5 on the front of that after these years with a 3 being in those 30 cents, now in the 50s. It's still important for me to zoom back and say this has still been a range, still range bound, and back at a retracement level here with no breakout behavior, and knowing that this can be rejection levels still underneath the last fib. And what we're going to actually do here too is we're going to do a little bit of an Elliott wave count on it, and we're going to incorporate the zigzag from Elliott wave forecast over here to do that count to show why we're still not out of the woods yet when it comes to this price action, not just because of being at the last fib level, not just because we haven't taken out that last resistance level, which just so happens to be at the 786, but because even in a downtrending Elliott wave count of a zigzag or even ABC, the count is still super valid for a pullback down here to the 30s again. And the way we invalidate that is with a breakout, and we haven't had one yet. We've just gotten back to retracement levels. So for those new to Elliott wave, we'll keep it very simple today. Concept of Elliott wave is to have a motive wave with 5 impulsive waves, followed by corrective waves. 5 in the motive wave, 3 in the corrective wave, ABC in your corrective wave. So in your corrective wave, it is broke down into additional waves, in which wave A has 5 waves, wave B has 3 waves, wave C has 5 waves. Zoom in a little here, but within these waves, we have additional waves as well that we can hopefully count within here to signal that a correction is still continuing. A, B, C, zigzag, corrective wave. A zigzag is a corrective 3-wave structure labeled ABC. So when we take this idea into play, we say, well, what has been going on here? Take all of these off. We very clearly see there are 5 waves that have happened within here to work its way down to the downside. And that begs the question on if we are going to have another 5 waves to the downside to complete a zigzag ABC correction. Now, the Fibonacci relationship of wave B, which would technically mean if this was a corrective wave, this would be wave A, wave B, and wave C. How high can wave B go and still be within a corrective wave? Wave B can go up 50%, 61.8%, 76.4%, or 85.4% of wave A. But you can see there 76.4%, very similar to what we are at right now. We didn't quite hit that 78.6 or 0.786 fib, which is a 78.6% retracement of the entire fall, closer to that 76.4%, still residing within the rule of what a wave B retracement can do. Notice in this zigzag correction of 1, 2, 3, 4, 5 ABC, 1, 2, 3, 4, 5 with wave B, and the retracement being 618, that is exactly what we ended up having happening back over here for XRP here in 2021, is that we have those same waves, 1, 2, 3, 4, 5, back to 61.8% or a 0.618 Fibonacci retracement within the bounds of a wave B retracement, then rolls over for our C leg for ABC. Now, I brought this up on the channel and in live stream saying it would be so bizarre to see this. It would just be weird to see it within the location that we're at, as we're within, like, you can zoom in on this one level and focus in on that entirely and say, okay, 1, 2, 3, 4, 5, retracement back to 786, then we go on for a C leg. But how odd that would be within this particular context, that we are actually in a range, we're in a Wyckoff accumulation, and we've been here for this long. It would be a strange context to see happening right here. It'd be very unusual. But for me, it just can't be dismissed for really 3 real reasons. And it's 1, we have 5 waves down. and we're within the bounds of what a wave B can retrace. 2 is that we haven't gotten through all the retracement levels. Retracement levels of any size can be the ones that end up being the rejections levels, as we've talked about. While 702 is common, the other ones are as well. The reason why 702 is so important and brought up on this channel is because it's not included on the Fibonacci scale. This is what your Fibonacci is typically going to look like. 618, 786. You don't have a 702 in there. You actually have to add it yourself in order to see it, because it's not by default going to be in there and not part of the Fibonacci scale. But if we didn't add it and we only focused on the 618 and the 786, we would miss all these moments. It would be a total mystery as to why price reversed the way it did, when in the end, it has an absolute pinpoint nail. And we all scream, oh, it was C19 that did it. It was C19. Was it? But it doesn't mean that those other retracement levels aren't there, and it doesn't mean that they aren't important. They are important. We've seen examples of different ones being the rejection levels. And so as we sit here right now, without taking out the high, without having breakout price action like we typically see, it would just be, in my view, insane to be counting the eggs before they've hatched here. Price action is acting very crawly. It's not acting breakout. And even there, like we said, in 2020, we got back to that 786. We got knocked back from the 786 to eventually go and then finally have that breakout momentum and knock off all the crawling around stuff that we were doing. But a good way to imagine it is just like we talk about and like we show over there at the NFT, that the fight that has to go on here at these fibs, the fact that you'll get knocked back from them, the struggle that you have to go through at these, but eventually, if you can find your way to break through them, that's typically when you'll see those big breakouts actually end up happening. And that's the time when I get excited on this channel. When finally it actually gets broken through, that's when I actually get really excited. But as you can see, I get cautious all the way back up to them. So as we sit here currently right now for XRP, which is above 53 cents as I record, and as we have hit that 786 Fibonacci retracement, of course, I'm sitting here biting my fingernails thinking to myself, look, this is the spot where a lot of story usually gets told. This is the spot where you break out and it gets really exciting, or it's the place where downtrends continue. So as you sit here, biting the fingernails, at least I am, which is coming next? Is the range going to continue? Is the Elliott wave count correct? I would say the thing that is hard pressed on the Elliott wave count is trying to make an ABC out of this, to locate an ABC within here. There's many times where Elliott wave theory and Elliott wave counting can be subjective, and unquestionably there will be 50 replies in the comments of this video telling me this is the Elliott wave count. But in my opinion, the significance of the current price that we are at right now is going to tell a story. None of this price action has been breakout. We've seen how XRP's price acts. This is not acting breakout, but we're at that level where a breakout can happen from. We're at that level that we've shown markets make like real trending decisions from here. Either they reject down and the consolidation and accumulation continues, or they break out. But getting back to these levels is super common. But it's what happens from right here that actually tells the story of what's really going on with this asset. And so in the coming days, in the coming weeks, hopefully that's our story. Hopefully it is one where the actual breakout price action does appear. By June 13th, we know that we're supposed to be getting the Hinman emails released, or at least a response from the SEC is due. Will we get some type of ruling to finally show up here at this critical price level where we're at? As we've now consolidated and corrected the exact same percentages we did from 2015, 16, and 17, and have nearly elapsed the identical amount of time. And while falling the same percentages, then going on to consolidate at these lows as well, with similar accumulation schematics. Not out of the woods yet, but should we get an exciting thing to happen in this market, this is where it can happen from. And should breakout price actions start to appear, you better believe it, I will start hooting and hollering and getting really wild on this channel. But it is definitely within my typical behavior to be cautious at retracements. We're here. We know we're ready for a range breakout. These are where they can happen from. It's still fingernail biting. But boy, oh boy, should it happen, be a pretty relieving moment to finally have it. So we're at a perfect place, a perfect technical level for a catalyst to appear, perfect timing for something to show up in that case, deep into Wyckoff accumulation, same amount of time as we consolidated in 2015, 16, 17. And we've got ourselves just kind of hanging out here at the retracement levels. It's the perfect time for something with a catalyst to show up and appear. So set your alerts for 55 cents and above. Because if we end up seeing that price action up there, you know my phone will be ringing at me, my computer will be dinging at me, and I'll be running to Twitter and likely back here to YouTube to talk about it. Till then, we wait. And so if you're not following me over here on Twitter at BCBacker, typically this is where I do run to post something, if it's evening time or if it's on the weekends. So follow me at BCBacker. Otherwise, I'll catch you guys all throughout this week. I want to thank you so much for watching this video. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.